Good evening, gentlemen and ladies as well. It's the 30th of May. We have one more day until we're in June, which is a bit crazy. So let's run through the markets. So first thing I want to highlight here is that we do have, in general, a stronger dollar. And so I'm looking to see if we get a bit of a reduction today. Let's have a look, a bit of a retracement. And you can actually see if you look at the euro, you've had a bit of, it's an engulfing candle. We've had a bit of a push up today. That makes sense. The weekly still looks bearish. So there's no setups, but I just wanted to comment on that. Here you can see as well, this is interesting. To me, sterling is continually looking bullish, like it's quite strong. And here's my reasoning as well. We've got a higher low here. We've got a bullish engulfing candle. We've got an uptrend. So actually sterling to me looks quite bullish. Is it possible that sterling could strengthen from here? Yeah, sure. Why not? So let's see if that's the case, but I think it's a big thing if we break below this low here. Then let's look at Aussie dollar. So I spoke about this being a potential setup, and it's gone, but it's an engulfing candle. I mean, that's ridiculous. Kiwi dollar also continued down, but Kiwi is a bit like messed up right now. I don't know if you've watched any of the last couple of ones, but I did mention that whenever there is a New Zealand rate announcement, whatever it is, even if there's no change, it is always incredibly volatile, always. So just of all the pairs of the 27 currency pairs I trade, I would say Kiwi is the most volatile when it comes to that type of news announcement. Okay, so nothing to see there. Dollar yen, we've got 2 days down, so I would say green candle tomorrow would be a nice little bullish setup. Dollar still looks bullish, guys. It continues to look bullish all the way from here. So it's interesting because you kind of learn all these strategies from all these different people when you get going. If you wanted to know, Adam, what is the strategy that you bring to the table that nobody else really offers? Mine is probably double bottoms. These kind of reversals where you get that bullish divergence, nice little bullish candle. That's the only, like, for me, it's a ridiculously no-brainer to do, but I don't see anyone else suggesting it. So, and for me, for those of you who follow this, I would love to hear if you have something that is your particular strategy that's just for you. But for me, it's no-brainers. It's those double bottoms. Here we have a setup to me. So I'm going to just quickly put this up. This is dollar CAD. Cool. I think, and again, dollar CAD looking nice and bullish, dollar yen looking bullish. All of those to me are signs that the dollar, it's quite interesting because for the most part, those guys, dollar Aussie, dollar yen, dollar CAD, if they're all working in unison, it's because the dollar's moving. Just like, that's it. And obviously, conversely, I guess if Aussie, Kiwi, Euro, and GBPAUD all work in unison, then that's dollar strength or dollar weakness. But for me, I always find that it's the other three, like dollar Aussie and dollar CAD, they don't really have a plan for the most part. Anyway, so let's have a look. And so therefore that's the case. So you can see here, Euro GBP maintains its bearish outlook. The wife has just arrived home. That could be a potential setup. Potential setup. So I'm going to put that down as Euro Yen. Richard, always a pleasure. Do you find that, okay, so I'm jumping ahead. I was looking at your next comment, but do you actually find that useful? That's good. Do you think that I should continue to do them, or do you think, well, is that of like, or do you think that it's just a kind of a once-off thing? You watch 3 or 4 of them and then you don't need them anymore. But I really appreciate that, by the way. We have Euro Swissy looks bullish. So why do I say that? Okay, so we have a level here, there, and a very almost bullish engulfing candle. Okay, so that to me would be a double bottom. So what makes it a bit stronger? Well, we look at the weekly. Weekly is a bit bullish, but overextended. It's also coming at a major level here, potentially. So now we have two reasons so far, and then the third one is bullish divergence. So if I bring up the MACD and the MACD is bullish and divergent, then that's your third reason. So, and it's not really saying anything. Yeah, a little bit. Look there, boom. A little bit. Okay. So what does this mean? It means to me that, well, we could be looking at a setup. This could be a legitimate setup, or what it is it's the first bullish candle as a sign that the trend is starting to turn around, but it's not necessarily the last. We could find we go to a fresh. So I'm gonna mark this, and I'm gonna mark this as a higher risk setup. Okay. Cool. So we have this. I was looking for this to be bearish, but actually I'm going to remove this now, and I'm going to remove that, and I want to mention this one here. Why? Well, because that's three touches at the same level within a weekly uptrend. So to me, okay, so that's three things and potentially bullish divergence. So again, similar to Euro Swissy, that is a possible bullish signal. So the thing with trading, this is something I'd like all of you who watch these nightly recording sessions to be, what I'd like you to take away from them, to get out of them, is that there are lots of trade setups. So we know which way the market is probably going to go. However, there are some setups that are higher risk, lower probability. So if you have a trend, you've got a downtrend, and you get a pullback within a downtrend, it's a very high probability that if there's no support or resistance in the way, and the trend is nice and the quality of the trend is very nice, it's high probability that that trend is going to continue. That's very high probability. However, when you look, versus when you look at currencies, or an example such as Euro Swiss or Euro CAD, where I have a setup that looks bullish that I think is probably going to head higher. However, because it is counter trend, it's lower probability. So what is it? What gives it weight? Well, this one in particular has three touches. So three touches at support. It has a bullish candle that's formed now, and it has some bullish divergence. So what does that mean? Is that as higher probability as a pullback within a downtrend? No. This is a lower probability setup, guys. It's a lower probability setup. And I'm not talking about reward to risk. I'm not talking about how far it could potentially go. I'm purely talking about the odds of it being able to turn around. Okay. And it's really important, because what I want you to take away from this is that there are lots of setups. And actually, you'd be amazed how often the setups you take are probably not bad trades. They're just losing trades, but they weren't necessarily a bad idea. And actually, what you should be focusing on is trade setups that have very high probability. And the highest probability setups on average are trending setups within a strong trend. Or then the next one would be after you've had a reversal. So strong divergence, momentum candle breakout in the opposite direction, and then you get a setup which is the first continuation setup in that direction. So think about it like this. Setups are either continuation or reversals. And for the most part, continuations are actually safer trade setups. They're actually better setups. They have a higher probability of actually going to 1-to-1 or 3-to-1. So remember, when you're trading, you are focusing on 3-to-1s. If you're watching this now and you're thinking, well, I'm going to do a trailing stop loss because, I want to capture all the move if it keeps going. That is a not practical approach for your average trade. day trading is capturing a single move. And this is the thing, the best day traders I know are trading the 1 minute or the 5 minutes, and they're looking for a 3-to-1. And when that move happens, they look for all the evidence that sets it up, and they take the trade, and then when it's done, then it's done. There's no looking to ride the wave, none of that stuff. And as you'll notice that as soon as you focus on a single move, 2-to-1 or 3-to-1 or whatever, you will know, and that's it, and you accept that that is the single move, all of a sudden you'll notice how many of your trades do go 2-to-1 or 3-to-1 and then reverse. So you manage, in other words, you'll notice how many trades you actually manage to make money on, and then they reverse. And if you had tried to ride them out, trailing your stop loss, you would have lost money. So if there's one thing I can assure you of and guarantee you of, as much as a guarantee in this type of environment exists, is just take profits, man. And trading is not about riding it 4-to-1, 5-to-1. It's not. That's great if you get that. But if you have to feed your family and pay the bills, you take 2-to-1 or 3-to-1 or 1-to-1 with every trade. But that is the point, is that you take it and you close the trade and it is done. And as soon as you decide to commit to that, you will see your account starts to stabilize. Okay, so for if you're watching this and that still hasn't sunk in, just take note. Okay, so there we go. Sorry, a bit of a digression. Richard, yes, helps me a lot. I'm trying to go through your analysis and trying to implement your thought process, finding my trade. Okay, cool. So that's good. All right, now look, so here, for example, here we have a bullish, this looks bullish. So another thing I want to do in these videos is highlight what the chart is doing now. So does it look bullish now or bearish now, or is it giving mixed signals or what? And I would say that on average, my analysis of a chart is going to get an 8 or 9 out of 10. Meaning, there are going to be traders out there who might be able to, on some days, be able to analyze the chart better than me. They'll be able to call it better than I will. But on average, my analysis is going to be bang on. If you stuck me next to 10 other incredible technical analysts, my technical analysis should be amongst theirs on average every day. So what I mean by that is my analysis should be good enough to be in the top, well, I already know it is. Sorry, I know this already through TWP, who I work with. Where I'm already in the top 1%. The question is, am I in the top 0.1%? Because it's the top 0.1% that's the most outstanding traders. Okay, so, and I absolutely, can I get it wrong? Can I misread stuff? Yeah, sure, but not consistently. Consistently, I tend to read it correctly. And if you watch my weekly analysis, you'll know that. That looks good. I really like that. It's a bullish engulfing candle. It's on top of the 20-period moving average. So now it's broken above within an uptrend. Boom, and that's bullish. So you have about 5 reasons right there that this is bullish. I'm very happy with that. So Euro Aussie to me is a no-brainer. It is a bullish setup. So far, Euro Yen, Euro Swissy, Euro CAD, and Euro Aussie are all bullish. So immediately my brain is starting to go, okay, well, this must be Euro pairs. Is Euro strong? Look at this. There we go. There's a nice little setup there. We've broken the trend. We don't have a confirmed uptrend. So we don't have a high, low, high, high. That could be bullish. So let's go here. Let's go and look at my calculated instruments and let's look at Euro. So to me, this is just the Euro pairs. Okay, so this tells me what's going on with the Euro pairs generally in an uptrend. So remember, this is very important. In an uptrend, it's the higher lows that tell you it's an uptrend. So don't worry about the lower highs, worry about the higher lows. Okay, so that's bullish for the most part. What I mean is, today, sure, it's a little bit bearish, but the weekly and the daily are all bullish. Okay, so in case you were curious about that. If we look at sterling, look at that. Steady, 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 steady. Do you remember when sterling had this really bearish spot down here? There. And then the Bank of England, I think, started buying bonds or something. I'll find it, but anyway. I think if you don't know what caused this turnaround, you should look it up. Because I think that's the reason we continue to see bullish sterling. So in other words, I forget what it is. It was like selling bonds. It wasn't. It was buying bonds, I think. And if you can't, that's, I think, the reason we're going to continue to see a stronger pound. In other words, I think that they were looking to not just strengthen it just for that period of time, but actually probably for a year or two. So there might be something happening there. Okay, so we've had a break down through this level. Aussie dollar, we've had a look at these. Don't worry about this stuff. Okay, Euro Kiwi. Could be a bullish setup. Pound yen. 2 days down. It's very steady. I think it's going to keep going. So to me, pound yen is going to be just going to be a steady. Look at this. This behavior is really kind of, you know what it reminds me of? It's almost like institutional buying. Institutional buying is when you just see, on any time frame, you just see very like marching soldiers. They look identical. It's very good. Yeah, Liz Truss is a fair. Yeah, but there was actually, it's very interesting. I got to find it. There was legitimately something the Bank of England or some other sort of central bank, I feel embarrassed now that I can't remember, but something else within the UK where they consciously made a decision to start buying stuff to reverse that, and it worked. And it was, and look, I'm not always one of those fundamental traders. I'm like, okay, this is the reason the market's doing this. But in that particular case, there was a direct, it was like an options or a bonds or something that the bank did. And there's a video somewhere. So I'll tell you what I'll try and do. I'll make a note here. Find BOE bonds video, and I'll post it tomorrow night when I do this bonds video for Richard. Okay. Okay, so it's still going sideways. Let's mark this. So this is a suggestion I have, is that when you find yourself in a range, just mark the range. So do that because there's a couple of reasons why. One is, if it's still in the range, don't trade it. And two, when it breaks out of the range, it's going to move. Usually for, let's say it's in a range for 10 candles, whatever the time frame is, it's going to move for at least 5 candles, like half that time. Okay. Pound CAD looks bullish, so I'll stay with that, but no setup. Pound Aussie keeps going. Look at this. I missed this. I missed that. And that was a setup, guys. I missed that. And that was yesterday. And I missed it. But the reason why was it was a holiday. Pound Kiwi keeps going. It looks bullish. No setup. Aussie Kiwi. Okay, day one. So we're looking for a setup here. So it's not a confirmed uptrend. So very similar to some of the other ones, not a confirmed uptrend. So there was a pullback here. We went. So you wouldn't have got that. Not you personally, just no one would have got it. Here we had 2 days and we've continued down, but there's also a level here. Aussie yen. That's a mess. So here's what I'm going to do. I'm going to mark this whole area because that is just a mess. I'll do that, but that's a mess. Sometimes, so if you're wondering why, if you watch these videos, why I have one layout with OHLC bars and then another one with candlestick, it's incredibly, for me, might not be the same for you, but for me to look at the charts through different kind of setups. So this layout is purely to look at the flow of currencies. And when I look at it, I see kind of the flow of it, like it's just a river running. And then when I go back to the candlestick version, my normal one, which is actually my main one, which is the one you see in my weekly videos, then I see it kind of a different way. But I often find when I look at the charts this way, I see stuff. I see the flow of the price that I don't normally see. So if that is for you guys and you have to do that, that's great. Because it kind of breaks up the way you look at stuff. Okay. Kiwi Swissy, no setup. Kiwi Yen. Okay, so this now to me looks bearish. So I'm going to get rid of that. This now starts to look almost head and shoulders. Almost head and shoulders. And the head and shoulders thing never works, but I'm going to draw it anyway. Doom. Left shoulder. Pull back. Head. Yes. Right shoulder. Boom. Something like that. Something like that. Okay. CAD yen. So we had that I was saying looked bullish. That's what that was about. We don't need that anymore. We can see we've got a pullback here. Now we're approaching a big level. We are starting to look more and more bearish, but we are, and I think this is worthwhile mentioning, we are sitting above the 50-period moving average. So another thing, if you are a newer trader and you're like, I can't keep track of all the different things that you're looking at support, resistance, and you're above the moving average, and you do that, I can assure you again that that starts to come with time. You start to assimilate things as muscle memory. So I'll be looking at stuff, and then I don't always look at things in relation to the moving averages. But there are times when I go, oh yeah, it's also above that. So I don't always look at that. I just want you to know that there are the moving averages in the particular order they're in, or whether price is above or below that, is a habit that I've kind of forced myself to do. But that wasn't something that I always did. And there are certain things that I definitely am looking at. The most important stuff that you can look at is the swing lows and highs of price action. Excuse me. That is it. That's your number one thing. Higher lows, higher highs. Excuse me. Then I'll look at the MACD. Then I'll look at other stuff. The fact that I see this is above the 50-period moving average, that I might have just as well have missed that. Like, so I just don't want you guys to think. Now look at this as well. So look at Swiss yen. Look how steady this is. Very, very, very steady. I want you to take something away from this as well. SNB, the Swiss National Bank, they are, if nothing else, they are consistent. They don't like change. The Swiss hate change. They hate it. So what you can count on from the CHF perspective is very little change. It's like if there's a move, but they're not inclined to move the markets. Whereas you look at, say, for example, Bank of Japan, Japanese have no qualms because they're traders, they're very good with candlesticks. They have no qualms about trading the markets. They can read the markets, they can do it. They have no qualms. It's in their minds, it's not a risk because they have the skills to read it. So they don't see it as a risk. Whereas the Swiss are a bit like, I'm not going to take a chance. Okay, so I am looking for a setup here tomorrow. And this is sideways. Now, you don't always know that the market's you don't know. How long do you need to know that it's going sideways? Well, based off this, I would say you need about 10, 12 candles, which means 2 weeks before you really know it's sideways. Okay, that is it. Cool. All right, so what have I got so far? So far we have, just to recap before I move to the other things, dollar CAD looks bullish. Euro yen is a potential setup. So remember, the idea here is that when the market is pulling back, you're looking to get in if it turns around the next day. Euro Swissy could be a double bottom. This is a lower probability but valid setup. So one of the things you could do here is look at the other Swiss pairs. So look at dollar Swissy. Does dollar Swissy look bullish? Yes, it does. Does pound Swissy look bullish? Yeah, I would say it looks bullish. Aussie Swissy? No. Does Kiwi Swissy? No. And does CAD Swissy? Oh, well, Kiwi Swissy might. Maybe. And does CAD Swissy? Yeah, maybe. So there's a lot of Swissy pairs that look bullish, therefore that looks good. And then we had Euro CAD. Bullish, possibly sideways, but bullish. And Euro Aussie. That looks good. Uptrend, came down, retested the moving averages, bullish engulfing candle. There's a ton of lots of little bullish signals there. Okay. Then we have, so there we go. So let's go look at this from this perspective. Roseman, hello. As Germany is officially now in a recession, do you think America will also follow into recession too? No. No. It's a very confident statement, I realize, but no. In fact, I know that the technical definition of a recession is 2 successive down quarters. But the thing is, that could be a retracement, and then the next quarter it's up. So I think that what we should do is have our own definition of a recession. In other words, we need to see multiple things. We need to see a weekly index under the 50-period moving average for that country. So the DAX must be under the 50-period moving average, and the Euro X should be that. Okay, so if we see that, then we can say, okay, that's a good start because that's a bear market technically. I think we should say that there are job losses happening. So in other words, I think then you should have 6 months of successive, which is 2 quarters of successive job losses. So what I want you to do is I want you to think about, because I think we live in a very weird period now where you're going to have maybe properties overpriced, but unemployment is low, which is not the case in previous recessions. Right now I'm finding there's plenty of jobs. People can find work, which is not the case in a recession. So therefore, you have to look at the jobs. If the jobs in Germany are low or dropping, then that would be, to me, that is obviously the number one kind of signal for a recession. And the stock market. So the stock market is one thing, jobs is another. And so I would just look for multiple figures. And I think if you do that, you will get a more accurate understanding of where the market is before the media state it. But this whole thing, we've actually disproven in the US. In the last year or two, we've actually disproven that if you have 2 successive down quarters, it's a recession. Actually has been disproven. So although they say that, it was immediately, like the market immediately rebounded from that. So I don't know what you guys think for anyone who's watching this, but that is my suggestion. I think that if you're watching this, you're trying to read the charts and you're trying to build the skills and you're trying to get a sense of stuff. And therefore you should, let's try to find a way that is actually a better indicator, because that indicator can fail. It can give you false signals. All right. I'm rambling tonight, but hopefully it's worth it. Gold. That's good. Why is that good? It's a bullish engulfing candle, engulfs these two off a major level. We are in a downtrend, so I'm not saying it's going to turn from here, but look at that weekly. We're in a weekly uptrend. Well, yeah, let's call it a weekly uptrend. Let's see what happens. Remember, we've got one more day. So in order for this to be a very strong reaction, so I used to be, I heard people in the past talk about how it was very important about where a candle closed. And I used to dismiss that. Nowadays, I don't dismiss it, but I understand it. I'm going, look, if this closes near the lows, if a candle closes near its highs or lows, that's usually a good indication of what its next intention is going to be. So in this particular case, if this doesn't close near the lows, I don't consider that as bearish as if it does. Hopefully that makes sense to you guys. So a very bearish rejection would close right near the lows. A not so bearish might be indecision. So what does that tell me? It tells me, well, we might have a move down here and then go back up. But if it closes right near the lows, it's very bearish and it might move further down. There's a lot, especially in the monthly, because it takes 20 to 23 trading days of activity to get to that point, and therefore it's taken a long time to get there, and sometimes the longer term momentum shows up. Okay, so silver is in a downtrend, and that was actually a valid setup there, but it is still in this area. So if it stays above this area, it's holding. Sounds odd. With okay, I thought I saw a pop up there. Natural gas. Oh, so far not really offering me any change there. Crude oil, Brent crude. Woof. Okay, so here we go. Okay, so let's talk about this. To me, Brent crude is not, based on the movement today, Brent crude is not trending. Look at this. It tries to go up and just breaks the trend. Here it was going down, then it goes up, then it goes into an uptrend, then goes down. It's not trending. And when you look at it here, for a bit of this candle, which is November, December, January, February, March, April, May, it's sliding, but it's not trending. And here you can see a bit of a pullback, bearish candle. I was probably going to carry on down. My point here is crude oil is untradable right now. And if you're thinking, well, maybe there's some traders out there trading it, not technical traders. There's no technical traders trading this, as far as I can tell. There are no high probability setups signals here. It doesn't know where it wants to go. It looks more bearish than bullish. Look at the 50, 20, and 10 are just flowing down. We've got that flowing lower. We've got a pullback in here, but it's still sitting here. It's still sitting at that level. So crude oil is not really offering a lot of clarity. And as a trader, if I was a commodities trader and I could trade lots of different things, I'd just bail from this. I would bail from this hard because it is crap. It's terrible. There's nothing there. However, if you are an options trader. So for those of you watching this who don't know what options are a different way of speculating on what the market's going to do. And what's cool about it, so if you're normally just trading like we are now, technical CFDs, you can say it's going to go up or down, and you can trade it that way. Okay, but options, you've got multiple options. You can say, well, I think it's going to go sideways, I think it's going to go up, I think it's going to go down, and it's time based. So you can say in this particular case, you can say that I think crude oil is definitely not going to go up. So you could take a position on the idea that crude oil is not going to go up, which you can't do with normal traditional CFD trading. Or you could say, you know what, I think it's going to go sideways. And so you could take a position on it going sideways. And so options trading is another way of trading. So my recommendation is to people in their first couple of years of trading, you're either an options trader or you're not. But eventually when you get to a point where your brain doesn't have to really crunch numbers too much, then you can look at both. So I've been doing this for 10, 15 years. And I can look at options trading now and it doesn't mess with my thinking. But if you try it in your first couple of years before you've nailed everything else down, your brain's not going to be able to do both. Usman, if you're watching, I think you might love options trading. Seriously, I think you might love it. Okay, so let's go through this. Sorry, let's go through this. Wheat, I thought that was going to be a turnaround. Nope, no setup there. Coffee, bearish. Okay, let's move that over there. Cotton. Look at that bullish setup. Okay, so I thought we'd come back, find a setup there. We haven't, but look how bullish it is. Fallen through, but still within there. High, low, still bullish. Okay, indices still in a downtrend, guys. Lower highs. S&P in an uptrend. High lows, high highs. So let's see if we get a setup tomorrow, if tomorrow is bullish. NASDAQ. Okay, no setup, but we are looking. Well, what I would like you to do is to go on YouTube and look at, just Google, just YouTube search options trading for beginners. Options trading is, honestly, it's, okay, so let me give you a bit of a heads up here. So again, you might love it and you might actually prefer it to normal trading. Basically, you take a position. You say, look, I think the market's sideways, or I think the market's going to go down, or I think the market's going to go up. Now, you have a choice. In a way, it's a little bit like insurance. You take insurance out on saying, I think this is going to happen. So you can say, I think this is going to happen, or I want insurance against certain things happening. Or you can sell insurance. In a particular case, you could sell insurance. If you know, for example, that the market is really bullish, you could sell insurance saying the market's going to be really bullish and you don't expect it to go down. And somebody else might come along going, I think the market's going to go down. I will buy that insurance from you because I think the market's going to go down. And here's the beauty of it, is that as long as the market keeps going up, you get paid premiums. They are paying you the insurance premiums because they're paying you for that. And eventually that, and it always is time-based, and eventually it expires. And when it expires, if the market has not gone below a particular level, if it stays above it or keeps going up, you get paid out in full. So while you're waiting, you keep getting paid premiums. In other words, they keep paying you a daily amount. And then eventually, if it expires and you're completely right about the whole thing, you get settled. Now, there's risk. I mean, there's risk in certain options. However, if you know what you're doing, the risk is containable. This is crucial. The risk is as containable as your trading is. So that's what I want you to think about. You can buy the insurance. In other words, you can buy the contracts where you think the market's going to do a certain thing. You will be paying the premiums, but if you're right, you'll get paid out at the end. Or you can sell the insurance. You can sell the insurance and you can say, well, I think the market's going to do this. And anyone who decides ultimately, so the way that it works is you go into your IG account, IG index, for example, and you decide to sell a put option, which is what I do. So for example, I'm in a bullish market, I sell a put option. So let me very quickly, for those of you watching this, I sell a put option for the NASDAQ below here. So it'll be a 13,13500 put option, and I will sell it, and you get different types. You get a weekly put option, you get a, don't get too worried about the names and stuff, but you have a weekly option, a monthly option, and you might have you'll have a shorter, a medium term, and a longer term. And you could choose whichever one. But the longer term that you take, the longer the term you take, the more you get paid premiums. So I could, for example, take a June or July options contract on the NASDAQ core, and it'll be a sell put option, which means basically I'm of the opinion it will not go below this level. And then I'll sell that put option. And basically, as long as the NASDAQ stays above that level until June or July when that contract expires, I'll earn a premium on it, and when it closes out, I'll get a certain amount of money on it. So in a way, what you're doing is you're creating a market for yourself. Don't worry about who buys it or who does it. You just sell it. It's the same thing as when you get in and out of a CFD trade. It's the same thing. You don't have to worry about who's getting in and out on the other side. The broker takes care of that. You just either buy or sell an option, whether it's a put option or whatever. Anyway, so I'm just saying that it's a whole other area, but you can use the same technical analysis. That's what I wanted you to take away from this. But because you can, yeah, it's a good thing. And if you manage it correctly, it's very safe. Okay, so the DAX staying there, S&P, Nikkei still looks good. Still looks bullish. Okay, Apple. Excuse me, still bullish. Amazon still bullish. ARK. So here I would be looking for a bearish setup in this area. Which is weird because actually I'm generally bullish on, that's not ARK, it was Glencore. Sorry, no, wait. AT&T. ARK, I am roughly bullish on. Glencore, bearish on. We're still in this area, so let's just expand that out. Sounds good. There's something called an iron condor, okay? So look up iron condor. It's a strategy. It's a bit complicated, but look it up for options. Look it up. That's not what I do. I do a straightforward thing. I just sell put options. That's all I do. But there are different things you can do. So you don't have to do it all. Let's be clear, guys. You do not have to do them all. You can do CFD trading. You can do day trading. You can do swing trading. You can buy options. You can sell options. You can do one or more. You can do anything or all of them. But there's a price to pay in terms of the amount of time invested in it. Okay, Coca-Cola keeps dropping, but it is still in an uptrend on the monthly. Okay, so that doesn't mean anything until we kind of get that monthly closed. BP. Still a nice correction back down to this level, still within a good period, so that's okay. Just quickly go through these. Waiting for General Motors to break up. Adidas, no. So Meta, you're looking for a pullback. So Meta, you're looking for a pullback into this area. Morgan Stanley trying to turn around. I stand by that. It does really looks like it's trying to turn around. Waiting for a pullback. Oh, remember here, I was saying I expect this to turn around now. So that's my weekly thing. Netflix looks fine. That looks bullish. That's very bullish, guys. So PayPal, that looks bullish. I'm going to just say that looks very bullish here. Spotify, it's topping out a bit. Spider, bearish. Nothing happening here. I'm just going to remove this. This is a joke. Doesn't mean anything. Tesla, I think Tesla's going to break out. I'm not really a fan of Elon Musk these days, but I am a fan of Tesla, if that makes any sense. And Tesla looks bullish. So we still have to get out of this zone. Vanguard, Vanguard. I think T-notes, bonds, bearish. Cryptos, trying to break up. Okay, cool. I'm going to leave you with that. Richard, Glencore has a 25 billion M&A deal with Viterra. Okay, I wasn't aware of that. Okay, cool. Is that deal going to boost the stock? I would think so. any kind of deal where there's an expansion, especially like you said, mergers and acquisition, I think, as he says in American Psycho, murders and executions. I would think so. Usually in a merger like that, they get rid of the driftwood. Should be good. Okay. I think so. Okay, I'm going to wrap up. That's it for me. I really enjoyed tonight's one. I love the interaction. And hopefully tomorrow night it'll be about the same time. I'll let you go. Richard, always a pleasure to have you. Usman, thank you very much. Guys, thank you so much. And I will see you tomorrow. Okay.